Hi, everyone. Hello. So we have people just strolling into the webinar right now, but I wanted to mention we're so excited to have you with us here today. Before we get started, as we kind of give some of our friends here some time to pop in, I'd love for you to kind of share in the chat some reasons why you decided to join us here today. There's some great information that we have to share with you with one of our trusted partners here. So before we kick things off, I'll introduce myself. My name's Amanda, and I'm part of the team here at Dribble. So we've partnered with Collective here today to share more details, highly anticipated information from our community, LLC versus S Corp, which one's best for designers for you guys. So we're so thankful to be partnering with them. It's highly anticipated, and we're really excited to get started. So let's see what's everyone chiming in here on the chat. Starting their own business, looking to start freelancing. Freelancing, of course, of course. We have such a huge self-employed community here at Dribble, which we so appreciate. So this specific webinar is just to kind of hold your hand and guide you through that landscape and process on transforming your business and navigating this whole new world of freelancing, side hustling, and self-employment. Okay, cool. Become self-employed and be my own boss. Yes, love that. Oh, yeah, want to do freelancing, but do it correctly. Love it. Consulting business. Wondering if you need an LLC or S Corp. Well, I think you have entered the right place. So we still have a few moments before we get started. I know that there's still people just flowing into the room here. But I do want to just give a little background. We're so excited to have you here as we dive into some of these crucial insights about business structures, tax savings, specifically tailored to our community here at Dribble, the design community. So, as you know, and as you're kind of explaining to us in the chat here, this topic is so crucial to the community and members like you as they're trying to navigate their business and everything that brings with it. So, thankfully, we've partnered with Collective. And as you can see, Andi here, they are our trusted partner to provide you with the background information you need to make these informed decisions. We're not the professionals here. That's why we partner with people like Collective. So today's webinar promises to be highly informative. They've pulled out all the stops thanks to Collective and our talented self-employed finance guru, Andi Smiles. So it's my pleasure to introduce our speaker, Andi Smiles. She has over 13 years of experience in self-employed finance. She's a seasoned tax expert, and she's going to guide us through these complexities that everyone's tossing in the chat right now. So as we know, S Corp and LLCs could be a game changer for your business. So they're the ones that are going to hold our hand and walk us through this experience. So without further ado, please join me in welcoming Andi Smiles.
Thanks so much, Amanda. It's so great to be here with the Dribble community. We love all of our solopreneur friends and freelance friends, and specifically our creative friends. So I'm just going to switch over to our slide deck and we will get started. Just doing all the Zoom things. All right, let's start off with what we are going to talk about today in this webinar. So we will go over Self-Employed Taxes 101. I did see in the chat that some of you are newer to freelancing. Some of you have been doing it for a little bit longer, but it's really important to understand how you are taxed by default because that will flow into understanding more about the LLC and the S Corp. So then we will talk about LLC and S Corp basics. We're going to talk about the differences between the two. We'll get into how to choose the right structure for you. And then we'll talk a bit more about how to get started At the end, we will have a live Q&A, and this is very important. For the Q&A, please put your questions in the Q&A box and not the chat. The chat is a great place for you all to chat amongst yourself, but it's very, very difficult for me to keep track of questions in the chat versus the Q&A box is fantastic because I can go through, mark off the ones I've answered, and that ensures that your question will get answered. Now, before we jump deep into the content, I just want to send a quick message from our legal team, which is this webinar is for educational purposes only. Nothing contained in this webinar should be viewed as legal or tax advice. Please always consider consulting a professional if you need personalized legal or tax advice. And again, before we jump in, I just want to tell you a little bit more about Collective, who is hosting this webinar. Collective is the first all-in-one financial platform designed for self-employed people. What does that mean? That's a lot of words on the screen. Well, this is your money when you're self-employed. Some of you may already be experiencing this. There's a lot of stuff that you need to keep track of when you're self-employed, from doing your taxes and getting your business set up to those quarterly estimated taxes. And oh, you also have to think about bookkeeping. There's a lot of pieces. And it gets even more complicated. Well, with Collective, your money with Collective looks like this. All of these disparate pieces come together into one single platform where they're organized and you are able to manage your business all under one login. Now, I know we got to know each other a little bit more in the chat, but Sarah is going to launch a poll so I can understand a bit more about those of you who are here today. So I want to know from the folks here today, what are you struggling most with right now as you start your freelance business, or if you've been freelancing a while, what's really keeping you up at night? Is it setting up your LLC or S Corp? Is it getting your taxes done? I know we just finished tax season, probably kind of stressful for some of us. Is it getting your bookkeeping done and staying on top of your bookkeeping? Is it finding ongoing financial advice, or is it thinking more about the future with retirement and benefits planning? So I'm going to give everyone a couple more seconds to fill out our poll, and that'll help me understand how to tailor this webinar to really address the questions that you all have. All right, let's close the poll and see what the people have to say. All right, 41% of you are struggling with setting up your LLC or S Corp, 28% with taxes, 13% with bookkeeping, 14% with finding ongoing financial advice, and 5% with retirement and benefits planning. The good news is whatever you chose, we will touch on something about that today and how we can support you. So with that, let's talk about self-employed federal tax basics. And I just want to call out all of these beautiful photos that are in this deck that you'll see throughout the presentation. These are Collective members. These are real members who are using Collective. Okay, so this is how we're going to talk about self-employed tax basics specifically for the United States. So in the United States, there are two types of taxes that self-employed people pay. And the first type of tax is income tax. Now, income tax is what people generally think of when they hear the word taxes, tax season, or April 15th. So pretty much everybody in the United States with earned income is going to be paying income taxes, including self-employed people. Now, in the United States, individuals pay between 0 to 37% in income tax, and that is based on their tax bracket. Now, there's something really important to know about how the US tax system works. The US has what's called a progressive tax system. And what that means is that you don't pay a flat rate on all the income that you earn. So if you have been told at one point that you're in the 22% tax bracket, you might think that that means that you're paying 22% on all of the income that you earn. But that's not actually how it works. Because we have a progressive tax bracket or tax system, your income is taxed in chunks or tiers. So the first chunk of money that you make may be taxed at 10%. The next chunk of money could be taxed at 15, the next chunk of money at 22, or 20, and then the final chunk of money that you earn is taxed at 22%. So your tax bracket is not actually a flat rate that you're paying on all of the income that you earn. Instead, it's where you cap out in the percentage of the tax that you pay. So this is good news, because if you're someone that heard that you're in like a higher tax bracket and you're getting kind of worried about it, don't worry. It is not a flat rate. Now, the second type of tax that self-employed people pay is self-employment tax. Now, this is different from income tax for two reasons. First, only self-employed people pay self-employment tax. And second, unlike self-employment tax that is not, or unlike income tax that is not a flat rate, self-employment tax is a flat rate of 15.3%. And when you're paying self-employment tax, you are paying into your Social Security and your Medicare taxes. And we see a breakdown right here on screen of what makes up that 15.3%. Now, there is a key difference between being an employee and being self-employed, which is that when you are an employee, you are still paying into your Social Security and Medicare tax. But half of this tax is paid by you, the employee, and half of the tax is paid by your employer. So you're only on the hook for half of that 15.3%. But when you are self-employed, the word self is in there, you have no employee, which means you are responsible for both halves. Now, I want to demonstrate this idea in a different way, which is with real dollars. So this can really help you understand why self-employment taxes can feel so expensive. So let's pretend that this person on the screen owes $15,000 in Social Security and Medicare taxes. When they are an employee, they are only personally paying $7,500 because their employer is paying the other half. But when they are self-employed, they're paying the entire $15,000. That's a lot of extra money that you are personally on the hook for. And this is why often if you go from an employee job into self-employment and you're like, what is going on? It feels like my taxes have doubled. Why is this so expensive? Well, it's because when it comes to Social Security and Medicare taxes, your taxes have doubled. Okay, so we just talked about the two taxes that you pay when you're self-employed in the United States. That is going to be self-employment tax, that 15.3%, and that income tax. So now let's look at how you are taxed when you are self-employed. Here is the tax structure for a self-employed person. Here at the top, we have our revenue. Revenue is just simply the money that you earn for your services. So it's all the money that you earn before your expenses and before taxes. We take our revenue and we subtract our expenses or tax deductions. What is left is what's called net income. Now, if the net income number is a positive number, it's called profit. It means that you made more money than you spent. If net income is a negative number, this is what is called a loss, and it means that you spent more money than you made. Now, when you are self-employed, regardless of if you have a profit or a loss, that profit or loss is going to pass or flow through to your owner tax return. So this is good news, because when you're self-employed, unlike a C Corp, your business is not being taxed at the corporate level. Instead, the profits or losses are going to flow through to your personal tax return, and you will pay self-employment tax, that 15.3% on your self-employed business profits. And then you will pay income tax. Now, income tax is complicated. You pay income tax on your taxable personal income, which is made up of your business profits plus any other income you have in your life. So if your business is currently a side hustle and you have another job, you will combine those incomes. Or maybe your business is your full-time hustle, but you're filing jointly with somebody and they have income. You're combining all of the income, like putting it all in the pot, and then you're subtracting your personal adjustments and then the standard or itemized deduction. That becomes your taxable personal income, and that is what income tax is based on. Now, You don't need to go calculate your own income tax. I'm only showing you the complexity behind it so that you understand that everybody has a unique tax situation and that there's not any one size fits all tax advice for every single person, because as we can see, there's a lot of factors that go into calculating your income tax. Now, the other key takeaway of this slide is that when you are self-employed, you are paying both of these taxes combined. So it's not whichever one is greater or whichever one is less. It is the combination of these two taxes. So why does this stuff matter, right? You came here to learn about LLCs and S Corps, and I'm just talking about the US tax system. It matters because how you're taxed is different if you are an LLC or an S Corp. And we're going to get into those specifics now, but you really need to understand the foundations or the fundamentals of how you're taxed as a self-employed person. So let's talk about what is an LLC. Before we actually talk about LLCs, we need to introduce this concept of a legal structure. So an LLC is a type of legal structure. So is a corporation. And legal structures are formed within the state with the Secretary of State. So an LLC is not formed with the IRS. The LLC is not a national entity. So in other words, you're not forming it with the federal government. Your LLC will be formed with the Secretary of State or equivalent agency of the state that you live in. And when you have an LLC and you're forming an LLC, there is a formal organizational process with the state. So you have to go file paperwork to set up an LLC. In other words, you don't just have an LLC by default. There is some level of paperwork and work that you need to do. Now, after you have an LLC or any other legal structure formed, you are required to file in most states an annual report and sometimes even pay annual fees. Again, LLCs are formed with the state, so the process, the reporting requirements, and the fees are all going to differ based on the state that you're in. Now, you may be thinking to yourself, I haven't done any of that. I'm just freelancing. So if I don't have a legal structure, what does that make me? If you don't have a legal structure and you haven't gone through that formal paperwork process, you're what's called a sole proprietor. And there's nothing you need to do. As soon as you start to have self-employed earnings, or another way to think about this is 1099 earnings, you're automatically become a sole proprietor. And when you are a sole proprietor, legally, you and your business are seen as one. So when we say legally, we're talking about under the eyes of the law. So what does it mean to be one under the eyes of the law? Legally, there is no separation between your business and your personal assets. So even if your business and personal assets are in different bank accounts, again, we're talking about how they're seen legally. And legally, they are all one. Now, as a sole proprietor, your business profits are passed on to you, the individual. So that chart I showed you earlier of how you're taxed, that's how you're taxed as a sole proprietor. And the nice thing about being a sole proprietor is you don't need to file annual paperwork with your state. You don't need to pay annual fees because there's no entity to maintain. So that's a sole proprietor. Now let's talk about LLC basics. Now, we already discussed this, but an LLC is a type of legal structure, which means in order to have an LLC, you do need to go through a registration process with your state, do that ongoing reporting, and sometimes pay state fees. Now, one of the main benefits of having an LLC is that it gives you limited liability protection, which is going to protect your personal assets and from business lawsuits and creditors. What does this mean? So remember how I said when you are a sole proprietor, you and your business's assets are one under the eyes of the law. When you are an LLC, your business and personal assets are considered separated. That LLC is creating a legal shield between the business assets and the personal assets, which in most cases cannot be penetrated. That means that if your business is subject to a lawsuit or has debts and creditors, that they can only go after the business assets and that your personal assets are safe. So personal assets are things like your house, your car, your personal savings, your personal retirement accounts, your personal checkings. That is all separated. So this is one of the main benefits of an LLC and why people seek them out. They want to protect their personal assets. But there are other benefits to an LLC as well. It can lend credibility to your business. Some companies will not sign contracts with sole proprietors. They prefer to work with a legal structure like an LLC. So it can give you credibility and it can open doors to the types of clients that you work with. An LLC also allows for multiple members. At Collective, we focus on solo or single member LLCs, but if you want to have a business partner, you can have a multi-member LLC, which member just means owner in LLC speak, and own your business with somebody else. And finally, with the LLC, those business profits are also passed through to the owner. So again, that flow chart I showed you earlier, that same tax structure applies. And this is a really key point I want you all to remember. An LLC is taxed exactly like a sole proprietorship unless you ask the IRS to change your tax treatment. So I see this mistake a lot where people go and start an LLC and they think it's going to change their self-employment tax. They think there's going to be some difference in the way that they're taxed, and there is not. So if you form an LLC, there is going to be no difference in the amount of taxes that you pay. So there is a way that we can make your LLC taxes less, and we're going to talk about that in a minute, but keep that in mind that just by default, there's no difference in the way that you're taxed. So here's a quick recap of the differences between a sole proprietor and an LLC. The LLC requires registration with your state, the sole prop doesn't, and you get that wonderful liability protection, that legal shield between your business and personal assets with the LLC. The LLC can have multiple owners. Now, because a sole proprietor and LLC are taxed the exact same way, those business profits are going to pass through to the owner, and you are going to pay self-employment tax on your business profits. Now, there's one last thing that is really cool about an LLC that we haven't talked about yet, and the LLC can change the way it's taxed. It's called tax flexibility. And this, my friends, is what is going to bring us to the S Corp. So, fun fact, an S Corp is a tax election, not a legal structure. Now, I know that the way that we talk about S Corps is as if they're their own structure. But what is really happening when you have an S Corp, are an S Corp, form an S Corp, is that you are asking the IRS to tax your legal structure, like your LLC, under the rules of an S Corp. So the name of this webinar is actually misleading. We say LLC versus S Corp because that's how you're probably thinking about it right now. If we were to be technically correct with the name of this webinar, it would be LLC with the default tax treatment versus LLC taxed as an S Corp. Now, none of you would have attended today if we named the webinar that, which is why we call it LLC versus S Corp. But in practice, what is actually happening is that when you are an S Corp, you actually are an LLC taxed as an S Corp. So another way I like to think about it, if you think about building a house, what's the first thing you always do when you build a house? You lay the foundation. That is your LLC. Your LLC is that foundational aspect of your business. It's your legal structure. And then what you're building on top of that is your tax structure. That is the S Corp. So when you are an S Corp, you are still an LLC. I will, throughout the webinar now, still say S Corp, but sometimes to remind us of what we're really talking about, I will call an S Corp an LLC taxed as an S Corp to just keep that fresh in our mind, because it's one of the hardest concepts people have to understand, is that you are both LLC and S Corp. It's how your LLC is taxed. Okay, so let's say that you're like, okay, got it. It's my LLC and I'm either asking it to be taxed like an S Corp, or I'm just going with regular LLC taxation. Why would I go with S Corp taxation? So the primary reason people love S Corp taxation is that S Corp owners don't pay self-employment tax on their business's profits. Remember, that's that 15.3%. Instead, what's going to happen is the S Corp will create an employer and employee relationship between you and your entity. So it's a little meta. You are kind of splitting yourself in two. And there is the employer S Corp you and the employee personal you. And your S Corp is required to pay you, the employee, a reasonable compensation through payroll. Essentially, you're getting a salary from your business. You become your own employee. Now, these employee wages are subject to payroll tax, which is 15.3%. That sounds familiar because it's the same amount as self-employment tax, right? And it does the same thing. We pay into our Social Security and our Medicare. And like any other employee-employer situation, half of those taxes are withheld from your personal use paycheck, half become an expense for the S Corp, and that is tax deductible. Now, your S Corp profits, which are going to pass through to you, and your employee wages, both become part of your personal income, and that's where income tax comes in. This is a lot of words on screen. So let's go through this one more time, because I know just reading through it, it's like, okay, what's going on? So just as we discussed earlier, I'm not going to go back through this. This is just a refresher. So this is how you're taxed by default if you're an LLC or sole proprietorship. So this is just refresh our memories. Now let's go through S Corp taxation. Here at the top, we have our revenue. Remember, all the money you make before your expenses. Then we have our owner salary and our operating expenses, because our owner salary becomes a tax deductible expense of the business. We pay that 15.3% payroll taxes on the salary. Here's what we're going to do. We're going to take our S Corp revenue. We're going to subtract our operating expenses. We're going to subtract our salary. We're going to subtract half of those payroll taxes. What's left is the S Corp profit or loss. And just like the sole proprietorship, the LLC, that S Corp profit or loss is going to pass or flow through to your owner tax return. This is a good thing because it helps you avoid the double taxation that happens with a C corporation. We like this. We like that the S Corp itself is not being taxed at the business level. It's all passing through to you. And then you're going to report your W-2 wages or your salary, your owner salary, on your owner tax return. So you have two buckets of income that you're now combining on your owner tax return. And then you are paying income tax on that income. Okay, maybe you're starting to grasp it, but you're like, I don't see how this is helping me save any money on my taxes. So let's look at some numbers. Here's an example of somebody who has $160,000 in profit. Now, we're going to look at the difference between a sole proprietor or a single member LLC versus an S Corp or an LLC that is filing with the S Corp tax election, right? So they're still both LLCs, but one has a special tax treatment that's called the S Corp. Now, with the S Corp, this person can pay themselves a salary of $60,000. With the sole proprietor LLC, they cannot do this. So let's look at that third line down. How much money is subject to Social Security and Medicare taxes? That 15.3%. Well, for the sole prop, it's $160,000 because it's the profit. And for the S Corp, it is $60,000. So this just becomes a simple mathematical exercise. With less money subject to Social Security and Medicare taxes, you pay less in taxes. See that total tax line? In this case, it's $15,000 less. Now, people are usually very excited about $15,000 number. They're like, I want that, I'm in, but I actually think the last two lines are very interesting here. We have the pass-through profit. Now, why is the S Corp pass-through profit less than the sole proprietors? It's because those owner wages are a tax-deductible expense. So it's going to slightly lower your S Corp profit. But let's look at the personal taxable income. It's the same because you are going to just report those owner wages on your tax return. So the TLDR of it all is that you are making about the same amount personally, but you are saving money in taxes. Okay, so this point, you're probably thinking, I like this. This sounds great. I want to save money in taxes. What, I have to pay myself? Like, tell me more. What does that really mean? So let's talk about a reasonable compensation. Why is it called reasonable compensation? It's because that's what the IRS calls it. So we're using the IRS's terms. Now, with reasonable compensation, there is no set standard. This means you can't go to the IRS website and be like, reasonable compensation for designer in California. They don't give you that. It's a facts and circumstances argument. So how much you pay yourself is not a straightforward formula, unfortunately. But Collective or your tax professional can help. And you want to seek out this type of professional guidance because your salary is your tax strategy. What you are trying to do with the S Corp tax election for your LLC is to strike the balance between tax savings and being within the rules of the IRS. A lot of people start to ask questions like, well, can I just pay myself nothing and then I'm going to save tons of money in taxes? If you pay yourself nothing, you are right. You will have fantastic tax savings, but you will have no defensibility to the IRS because the rule of the S Corp is that you need to pay yourself a reasonable compensation as an owner. Okay, great. Well, I'm scared of the IRS, so I'm going to pay myself everything I earn as salary. Well, they will love you, but you will have no tax savings. At that point, you're just replicating the tax structure of the sole proprietorship. So what you're doing here is you're really looking at it strategically. You're not basing your salary on how much you want to pay yourself, your dream paycheck from your business, what you think would be so cool to get from your business. It is a tax strategy. Now, you might be starting to get worried and thinking to yourself, wait, you're telling me that I can't just pay myself whatever I want. I have to be strategic. How am I going to live, right? How will I live in this world? So let's talk about additional ways that you get money out of your S Corp. So we've already talked about one primary way, which is the payroll. That's that flat salary that we pick. But you can supplement your payroll using distributions. Distributions are transferring money from your business account to your personal account. You can take a distribution out of your business anytime you need it. And this is very, very common for S Corp owners. So, for example, I used to be an S Corp. I was self-employed for 12 years before working at Collective. And when I took my payroll on the first of the month, I had an automatic transfer that went into my personal account as well. Because if I needed this much to live by, my payroll, which was a tax strategy, was only this much. What am I doing about the rest of this? Well, that's where the distribution comes in to fill in the gaps. So you can take a distribution at any point. Your distributions are not taxed at the time of taking the distribution. So if you're worried about, but if I take a distribution, that's going to make me pay more in taxes, that's not how it works. Another way that you can get money out of your S Corp is through reimbursed expenses. The S Corp has a really cool thing that you can do, which is called an accountable plan. And basically, your business, the employer, is going to reimburse the employee, which is you, for the use of personal items like your home office, your personal vehicle, your home internet, your personal cell phone. So if you've been self-employed for a while, you're probably thinking, yeah, I already like write those things off on my taxes. I'm already like taking the home office deduction. You get to maintain that. It's just done differently. Essentially, your business is going to reimburse you for those expenses with real money, cash, and then the business takes that deduction on its tax return. So you get to keep all those wonderful deductions. And instead of just getting a write-off at the end of the year, you get actual cash out of your business. And let me tell you, when I had my S Corp, I was renting in San Francisco, and those reimbursed expenses were a lot because I was writing off my home office. I paid a lot of money in rent. It was significant every month to get that cash reimbursement. So let's talk a little bit about the differences between an LLC and an S Corp. But as a reminder, when we say LLC and S Corp, what we really mean is an LLC with the default tax treatment and an LLC taxed as an S Corp. I just can't say that the whole webinar. We'll be here a whole extra 20 minutes. So both the LLC and the S Corp gives you that wonderful legal shield between your business and your personal assets. Why? Because when you're an S Corp, you're still an LLC. So you're still going to get all the limited liability protection that the LLC offers. Now, both the LLC and the S Corp are pass-through tax structures, which means those business profits are going to pass or flow through to your personal tax return. In other words, you are not taxed at the corporate level. We like that. We avoid double taxation. You will only pay self-employed profits when you are an LLC with a default taxation, self-employment tax. S Corp, there's no such thing as self-employment tax in the S Corp universe. You've got income tax on both. Unfortunately, income tax is not something we can make go away. With the S Corp, you can pay yourself through an employee wage. You can't do that if you're not filing as an S Corp. So if you want to become an employee of your business, if you want to have a payroll run for yourself, you need to have the S Corp tax election to do that. Both LLCs and S Corps can pay themselves through draws and distributions. A draw is the same thing as a distribution. They just have different terms depending on your tax structure. I know it's never easy in accounting. It's like all these things are the same, but there's different words. You can take money out of your business account personally to supplement your income with both of these structures. And finally, the S Corp is going to file its own tax return. We haven't really talked about this yet, but that is one difference between the two. When your LLC is filing with the S Corp tax election, your business will need to file its own tax return. It's an informational return. Okay, so which one should you do? How do you know if you should just be a regular LLC or an LLC with the S Corp tax election? So an LLC is best for those who are new to business with very little earnings. The threshold we use here at Collective is $60,000 in self-employed profit per year. If you are earning less than $60,000 in self-employed profit each year, an S Corp is really not going to benefit you. Now, I want to caveat this with saying the IRS lets you do whatever you want. So I'm giving you the collective guidance because we have worked with thousands upon thousands of businesses. And this is where we have seen that you will feel the benefit of the S Corp. Something to know about S Corps, and we'll get a little bit deeper into this a bit later on, there's more tax and accounting complexity, which is going to cost you either time or money to outsource that. So you may, if you're earning something like $20,000 a year in profit, you may have tax savings, but the costs of maintaining the additional complexities will be much higher than those savings. And now you've just introduced more work into your business instead, and you're not really getting the benefit. So what we see is that $60,000 in self-employed profit per year is really where that sweet spot is to start considering S Corp taxation. Now, it's also best for those who want a simple, straightforward tax structure. If you're listening to this webinar and you're like, I don't want to deal with payroll and more paperwork, you're going to have to do that with an S Corp. It's sort of like you get the great tax savings, but there's a cost. The cost is that there's more paperwork, there's more complexity. So if you're like, I don't want to deal with any of that, I'll just pay the extra money in taxes, it's too much, then the LLC with the default taxation is right for you. Now, S Corps are best for those, as I've already talked about, who earn more than $60,000 in profit per year. Remember, profit is after your expenses, so it's your revenue after expenses. They're also best for those who want to maximize their retirement savings. We don't really have time to get into this today, but with an S Corp, you can essentially start a retirement plan that's called a solo 401k, and you're able to contribute both as an employer and as an employee. The cool thing about that is they each have separate contribution limits. When you combine those contribution limits, they're often higher than other types of retirement accounts. So this is something that people often cite as a really cool benefit of the S Corp that they didn't know until afterwards. And it's good for those who have enough cash flow to make regular payroll runs. So regular payroll runs does not mean that you have to have set a salary at the beginning of the year and stick to it because you've reported it to the IRS. What that means is that you can keep up with your payroll on a relatively consistent basis. Doesn't mean that you can't skip a month. You can skip a month, but what we don't want to happen is that you get to the end of the year and you haven't run any payroll for yourself. And all of a sudden, to be in compliance, you need to pay yourself $60,000. Where's that money going to come from? Right? So you do need to have some level of cash flow consistency to be able to make those payroll runs throughout the year so you're not in a cash flow crunch at the end of the year. Let's talk about what it's like to actually set up an S Corp and what it's like to maintain it so you really get a sense of the complexities. The very first thing you need to do if you want to be taxed as an S Corp is you must have an LLC. I'm sorry, all my sole proprietors, you cannot go from being a sole proprietor to being taxed as an S Corp. You need to have that legal structure in place in order to ask the IRS to tax your LLC as an S Corp. So that's going to look like filing your articles of organization, usually with your Secretary of State. You're going to file any other state required paperwork. Remember, LLCs are formed under the state that you're in. So every state will be different. And you'll want to have that LLC operating agreement in place as best practice. Now, once you have your LLC set up, or maybe you already are an LLC and you're coming to this webinar like, what's next for my LLC? You are going to file the S election. That's just a fancy way of saying you are going to ask the IRS to tax your business as an S Corp. The first thing you need to have before you can do this, though, is an employer identification number. You get that through the IRS. So if you don't have one of those, you're going to need that before you ask them to tax you as an S Corp. Then you will file the paperwork asking the IRS to tax your business as an S Corp. We call it the S election. Then you need to register for a payroll account, because guess what? If you're an S Corp, you're also now an employer of yourself. So there is some level of work that goes into registering for a payroll account, both federally and at the state level. And then you need to get your tools in place. So you need some kind of proper bookkeeping tool. A spreadsheet or shoebox full of expenses is not going to cut it once you're an S Corp. So you do need to invest in some kind of bookkeeping software, because now you have to keep track of things like payroll expenses. Maybe you're going to make retirement contributions, right? You have those salaries, the accountable plan, those reimbursements for your home office. You really can't do all that in a spreadsheet. And then you'll want to invest in payroll software. Now, payroll software is very, very important because it's going to keep you compliant with your payroll. People always ask me in these webinars, can I just do can I skip the software and just DIY my payroll? The answer is, like, legally, you can do whatever you want. But do I recommend that you do it? No. Payroll is very complicated. There's a lot of math. You have to withhold a certain amount of withholdings for different agencies. You also have to file paperwork every quarter for your payroll and send the right amounts to different agencies. It's a lot. And payroll software does all of that for you automatically. It is well worth the cost of the payroll software to save you the time and, frankly, the stress of trying to figure all that stuff out on your own. Then you want to set up your money flows. You want to be sure your business bank account is under the LLC. So you want to be sure that you're setting that up under the LLC. And your business credit card is also under the LLC. So you're going to maintain that wonderful liability protection. Now let's talk about operating. Every year you are going to need to file either your business and personal tax returns, so federal and state, because remember, the S Corp will have its own tax return now. So you have double the tax returns, and then your payroll returns. Now, the payroll returns, remember, the payroll software can help you out with that. You don't need to stress about the payroll returns if you have good payroll software. But there is paperwork involved here. You also are going to need to maintain your underlying entity, your LLC. That looks like filing your state paperwork and paying any state fees if required. And then you need to keep up with your books and your tax obligations. You need to maintain your bookkeeping, right? We got to make sure that we're, like, keeping track of our expenses. And you do need to pay estimated taxes quarterly as an S Corp owner on your projected profit. So you should already be doing this as a self-employed person, but that doesn't go away when you're an S Corp. Okay, so we're going to do a poll because I've been talking for a long time. I would like a sip of my tea. So Sarah's going to launch another poll. Are you ready to start an S Corp? Let us know, and then we will talk a little bit more about S Corps, and then we're going to get into your Q&A. I see about 18 questions in the chat, or in the Q&A box. So if you have a question and you haven't put it in Q&A yet, please do. All right. So let's see what the people have to say. 9% yes, I'm in, 68% not just yet, and 23% say I'm still not sure. So let's talk about this because we have resources for everybody. So for those of you who are not ready yet, that's okay. Our intention here is to give you the knowledge that you need in order to make these decisions in the future, because too many people don't know about LLCs and S Corps. So they just don't do it because they don't even know it's an option or when to start thinking about it. So if you're like not just yet, I really hope you walk away with from this webinar being like, I'm not ready for this yet, but I know exactly when I need to start considering it. That's exciting, right? Because then you're being intentional and proactive in your business, and I love that for you. For those of you who aren't sure or are in, let's talk about it. So this is what it's like on your own to start and manage an S Corp without collective. This looks similar to the one I showed you earlier, but there's a lot more things that are S Corp related. Suddenly you have to set up the S Corp, you have to do your S Corp tax return, you need to figure out that reasonable compensation that we've been talking about, you have that accountable plan for those personal expense reimbursements. There's a lot of stuff. And this is your S Corp with Collective. At Collective, we specialize in S Corps for solopreneurs. We have been working with thousands upon thousands of self-employed people to set up and manage their S Corp, because let's be honest, S Corps are very complex and there's a very specific knowledge set you need to know, but so is being a solopreneur. The type of advice that works for somebody with 10 employees is not the same that works for somebody who is on their own. So our expertise really lies in managing and setting up S Corps, but for solopreneurs. So we work with sole proprietors, we work with single member LLCs. So if you're already an LLC and you're like, okay, I got the LLC, but like I want to now do the next thing, we can support you. We also work with LLCs who are already filing as an S Corp. So if you came to this webinar today and you were like, I'm an S Corp and I didn't know any of this stuff, oh, help, we can support you. And then we also work with folks who are earning $60,000 or more in self-employed profits. So this is important because we want to ensure that the S Corp is right for you. We're not like, this isn't like an Oprah situation where we're like, S Corp for you, S Corp for you, S Corp for all. It really needs to be right for your business. And that is why we work exclusively with people who are at that profit threshold. Okay, so let's talk a little bit about what Collective actually does. Well, we do the LLC and S Corp formation. So if you don't already have an LLC, we will form that LLC for you in your state. We will file all the paperwork for your S election. We'll get you that EIN and we'll get you set up with that operating agreement. We also include monthly bookkeeping and accounting. So as a Collective member, you get your S Corp and LLC set up, but we don't just leave you hanging there, right? We're like, okay, good luck. We do all of your bookkeeping and S Corp specific accounting so that you don't have that on your plate anymore. So that means no more QuickBooks, that means no more spreadsheets, that means all of that is being handled in the background by our team of bookkeeping experts. We also have tools to support you with your accountable plan so you can easily submit your reimbursements, know how much to reimburse yourself every month. And then every single month, you also receive a monthly financial report packet. You can actually go into our platform and run your reports at any time. So if you are somebody that's like really interested in the numbers, but the bookkeeping is keeping you back from actually getting the numbers, this is a great option because we'll do your bookkeeping, but you can go in and self-serve your reports at any time. We also have payroll integrated into our platform. So remember how earlier I said you need to invest in payroll software. With Collective, you don't need to invest in payroll software because we have our own embedded payroll inside of our platform. So you can run your S Corp reasonable compensation and your salary. It also enables you to pay contractors and file 1099s. We take care of all those payroll tax filings, so you don't have to worry about those. And we give you S Corp reasonable compensation guidance, so that how do I know that I'm being strategic about how much you pay yourself? We have tools to help you with that. We also have do your taxes. So we will do your annual S Corp tax return, both federal and state. So you get that business tax return taken care of. And we do your quarterly estimated tax calculations and reminders. So if you are somebody that struggles to keep up with your quarterly taxes, or you're always stressed out because you're like, I don't know how much to pay myself or pay for my taxes, we do those calculations for you, and we send you reminders every quarter, both state and federally. And finally, we offer compliance and support. So we will send you annual compliance reminders on letting you know it's time to file certain paperwork for your LLC. And you also have a support team that you can message at any time. So one of the things I love about Collective, and one of the things that's really inspired me about joining Collective, is that this is all under one login and one platform. I think what I've seen in the past is people do what I call the Franken system, where they're piecing together each of these things. So they have QuickBooks, they have Gusto, they use LegalZoom, then they're kind of like DIYing a part of it in a spreadsheet. Instead, at Collective, it's all in one platform, it's all in one place, and you're getting year-round support for your business. Now, there's one more thing I want to mention that I haven't talked about yet. For those of you who are already an LLC, Collective can backdate your S Corp to Jan 1st. So that would mean that you would have the entire year tax savings. Now, this is only for existing LLCs, but we do have a process that we go through where you can backdate your S Corp tax election. So typically you can only backdate the tax election 75 days. So if you were to go on your own right now, you could only backdate your election to somewhere like early to mid-March. I'm like doing math right now. But with Collective, if you are already an LLC, we could take that S Corp election back to January 1st, and you could enjoy an entire year of tax savings versus 9 months. So think about it. That's a lot of extra money. It actually would pay for your Collective membership. So this is only for existing LLCs, because remember, you must have an LLC in order to file for the S Corp tax election, but we do this at no additional charge for our additional LLCs. This ends June 30th. So there's still quite a bit of time. You have about a month, and we're going to talk about how you can connect with Collective, how you can learn if it's a good fit for you. In general, you can learn if an S Corp is a good fit for you in a minute. But this is something I want to put out there, because often at this point in the year, a lot of people start to think, oh, it's too late in the year. I missed my chance. I have to wait till next year. If you're an LLC, you didn't miss your chance. We can do this for you. You can go back to Jan 1st. Okay, so how much does Collective cost? Collective costs $349 a month. We have an annual plan where you can save 15%, and there is a one-time onboarding fee of $199. This includes all of your monthly bookkeeping. This includes your accounting platform. This includes your payroll tools, and Collective is tax deductible. So this is what we cost, but we have a very special offer for our Dribble friends. So for anyone who's attending this webinar and coming in from Dribble, we are offering 1 month free and no onboarding fee. So that $199 onboarding fee is waived, and you will get 1 month free. So what we want to offer you now is a free call with one of our business advisors. Sarah has put that link in the chat. If you go to that link, you will be able to schedule directly with one of our business advisors. And this is a great opportunity. It's free, 25-minute call. You can talk about your unique situation, chat about, okay, I went to this webinar, I'm not sure, and talk them through your situation. And they will be honest with you and let you know Collective is a good fit, an S Corp is a great fit, or you got to wait a little bit, or it might not be a good fit for your specific situation, because there are a lot of nuances to all of this. And if I went through all of them, we would be here another 2 hours. So please go ahead and go to this link. Oh, worked for me. So maybe if you double click it, I see someone in the chat, but if you double click it, you will be able to schedule a call directly with a business advisor. This is a great opportunity. And again, it is a free call. All right, so I'm going to go through the chat. So before I do, I usually just look to see if there's any collective specific questions before I go back up to the top. So I do see 2 people asking if collective is tax deductible as an S Corp. Yes, collective membership is fully tax deductible as an S Corp. And then I also see someone asking, do you support non-residents LLC owners? So the answer is, if you are a non-resident, if you're a permanent resident, we can support you. If you are a non-resident, we cannot support you. And that is actually because an S Corp tax selection cannot be selected by a foreign LLC owner. So if you're a non-resident or a non-US citizen, then you actually aren't going to be able in general to have the S Corp tax selection. Okay, so I'm going to go back up to the top and answer questions just in the order that they're received. I'm going to kind of rapid fire this because there are 39 questions. So let's get into it. I have an S Corp, but I'm employed full time. How do I keep my S Corp active? I don't want to close it 5 years before I can use it again, I'm told. So you don't need to close your S Corp. If you aren't earning any S Corp income, then you don't need to pay yourself a reasonable compensation because there's no profit, right? And it doesn't make sense for somebody to be paying themselves out of a business that there's no profit. But what you will need to do, Diana, is you'll have to keep that underlying legal entity in good standing with your state. So that means filing the paperwork, paying the fees, and you will still have to, you will also need to ensure that you are filing that business tax return for your S Corp, just reporting zero income. So it's a little, it's tricky because you will still have some costs associated with it, but if you know you want to come back to it, it's probably worth it for you. Anonymous asked, will the webinar be shared with us? Yes, the webinar will be shared with you within 24 hours. Jessica, is that what people mean when they say LLC face double taxation? Referring to paying the 15.3% over the 7.65%. No, LLCs do not have double taxation. C corporations have double taxation. So what happens with double taxation and with a C Corp is that the business itself pays corporate income tax on its profits. So that's the first layer of taxation. And then the owners pay tax on any distributions that they take out of the business. So if they take, or they're called dividends in C Corp land, but if they take $50,000 out of the business personally, they pay tax on that. That is double taxation. So when LLCs actually don't have double taxation because the entity, the LLC, is not actually taxed at the corporate level. Anonymous, does this mean that if I don't make a profit, I owe no tax? That is correct. So if you are not earning any self-employed profit, and this is your only gig, because remember, you may pay income tax on other income, but if the only thing you do is being self-employed and you don't make any money, you're operating at a loss, maybe you're just getting your business set up, then there's nothing to tax you on. Josh, can you touch on writing items off on your taxes? Sure. I mean, essentially, just really high level, a write-off or a business deduction by the IRS standards needs to be an ordinary and necessary expense for your business. So ordinary is something that's very typical for businesses like a domain name or hosting a website or advertising, right? These are very ordinary business expenses. Necessary expenses can mean it's a bit more necessary for your specific industry. So for designers, something that might be a necessary expense is buying stock photography or going onto like a marketplace and buying design elements or design software. One thing to keep in mind with the necessary and ordinary rule is that it doesn't need to be like, it can be helpful for your business. A lot of people think of it as like, oh, it's necessary and ordinary, so if I can run my business without it, then I can't write it off. What the IRS actually says is that as long as there's a benefit to your business, which of course has to be within some reasonable state, right? We don't want to be playing mental gymnastics with the IRS, but as long as there's a benefit that can tie back to your business, that works under the necessary and ordinary umbrella. Leah. I have a variety of income sources as a landlord, a visual artist, a musician, and a designer. Can all of these fall under a single umbrella of one LLC or S Corp? So, no. One LLC, so the types of services that should fall under a single business, it has to do with the business activity code. So, for you, like a visual artist and a designer probably can fall under a single business activity code, but something like a landlord wouldn't. So, you would need to create different LLCs for these different aspects of the work that you do if you wanted an LLC for each of them. You would need to create different ones because essentially what you're looking for is how much can these be grouped under a single activity code. There is no way a landlord and a musician are going to be able to be grouped under the same activity code. So, Sarah, if you have a chance, can you pull together the article on holding companies? Because you have a couple options, Leah. You can create what's called a holding company where you have all LLCs, individual LLCs under one company. And that's something that you may want to consider. We have a great article on it that you can read more about the pros and cons of a holding company. Anonymous, for LLC, what is the 800 tax liability if you are taxed as a sole proprietor? So I think anonymous, what you're actually talking about is if you're in California, that's the California franchise tax LLC fee, annual LLC fee. There's no federal $800 tax liability. But as I mentioned earlier, every state has its own annual fees. And in California, it's $800 annually. It's actually one of the most expensive states to have an LLC in. So I believe this is what you're talking about. Anonymous, because we have an LLC set up as an S Corp. Yes, this was kind of like one of the whole main points I kept trying to make throughout the webinar. Anonymous, can you be a sole proprietor and tax like an S Corp? You cannot. So you need to have that bridge of a legal structure. Basically, a sole proprietor doesn't have the right to tax flexibility. If you're a sole prop, you have to take the tax structure you're given. The LLC, on the other hand, has a right to tax flexibility, and that's why they can ask to be taxed as an S Corp. How can I manage tax outside of the US, for example, VAT? I'm very, very sorry, but that's so outside the scope of my expertise. And this webinar, especially VAT, is like a very complicated tax in the EU. So I'm not going to be able to answer this question. Adrian, would a sole proprietor be best for someone who's just starting out as a business owner or freelancer, or should I just go with an S Corp? If you're just starting out, then an S Corp is likely too complicated for you and you won't feel the tax benefit. So it's starting as the LLC and knowing that you can file that S Corp tax election at any point. So you're not like stuck as an LLC forever if you just do an LLC now without the S Corp tax election. As soon as you're like, I'm making enough to be the S Corp, you can just file that tax election for your existing LLC. Juliet, if our clients are international and paying in international currency, does any of this information change? If so, how? So this is more of like an accounting question. If you are a US based business with international clients, it's more about how you're doing your accounting to account for the currency conversion fees. So it doesn't change the actual like tax structure, but this is really more of a bookkeeping and accounting type of question. And if you haven't figured this out yet, I recommend that you find a bookkeeper or accountant that is familiar with how to do proper bookkeeping and accounting that takes into account like currency conversions and using the IRS's standard conversion rates and how to do all that work on your taxes. Anonymous, is there a threshold of revenue that makes sense to say default LLC? We talked about this, but I'm happy to keep repeating it because this is like one of the key questions people have. It's $60,000 in self-employed profit. Azubike, can you easily change your tax method, S Corp versus regular? Yes. So as long as you are an LLC, you can easily ask to be taxed as the S Corp. Now, where it's harder is going backwards. So going forwards, we want to think about it as like LLC, S Corp. That leap, fairly simple. Going backwards is a lot more complicated. So this is why you want to think about an S Corp as an investment into your business and something that's going to be with you for a while, because going backwards is frankly quite complex and you will probably need professional help, unless you're going backwards to fully dissolve your LLC. But if you are going backwards because you just don't like being taxed like an S Corp anymore, it's complex. So it isn't something you can do year to year. You can't decide this year I like it as an S Corp, this year I want to be a default LLC. You really need to like choose the S Corp tax election as like, this is an investment in my business. I am committing to being in business for a while. Adrian, are you able? Same question. Anonymous. If I have a 9-to-5 job where I make $60,000 per year, and then I make an additional 30 to 60 in variable freelance work through my LLC, would it still be worth it to apply as an S Corp or stay as a pass-through LLC? That's a great question. At the levels that you are talking about, it would still be worth it to be an S Corp. Now, where it does not become worth it is if your 9-to-5 job is over $165,000 in profit. And that is because there is something called the Social Security wage cap. And when you have, so basically only a certain amount of your earnings can be taxed with Social Security tax, which if we go back to our very fun chart, maybe I can't find it. This guy, what makes up most of self-employment tax is Social Security tax. It's 12.4%. So when you are over the Social Security wage cap, which changes every year, and so in your case, you're below that. But when you're over it, then you don't really have the tax savings, right? Because you're no longer going to be subject to Social Security tax, which again is that big chunk of 15.3%. That's a very technical explanation. So TLDR, if you have a 9-to-5 job and you make under about $165,000 a year, still a good idea. If you make over it, it may not benefit you and you want to look at other options. That's when you might want to talk to a tax professional to help you figure out if there's a different way to structure your business. John, are income tax laws different from state to state? I'm in Florida. So there's federal income tax and there's state income tax. So federal income tax is the same. State income tax, yes. Every state has different income tax laws and income tax rates. Some states don't even have income tax. Anonymous, possible to set up in a different state from where you're located, like Delaware, our favorite topic. Sarah, can you share either the YouTube video or the article about setting up your LLC in Delaware? So generally speaking, you want to set up your LLC in wherever your home state is, which is where you do most of your work. Usually it's where you reside. The reason for this is that if you're going to set up your LLC in a state like Delaware, but you still live and work in California, you will need to be an LLC in both states. So, because California is like, you live here, you're working out of California, you need to pay me the fees too. So it doesn't actually benefit folks to set up an LLC in Delaware if they're working, let's just say in California, because what ends up happening is that you have to foreign register in California, and then you're doing double state paperwork, double state fees. So generally speaking, you should only really be doing this if you actually are working in multiple states. So if somebody is working in Maryland and Virginia, because they're in the DC metro area, that makes more sense to have your LLC set up in multiple states versus just doing it for trying to have a tax break. We have a great article that specifically debunks Delaware. Natalie, can an S Corp have more than one employee? Yes, you can have more than just yourself. Anonymous. I'm a sole proprietorship and filed jointly with my partner who is employed with high tax bracket. I'm assuming I'm paying the full 15.3% on my business partners and the profits, and the years when I operate at a loss, I'm not paying the 15.3%. And I never paid quarterly due to combined income in the end. Is that okay? This is quite complex, and I think this is one of those things that kind of like high level, if you're operating at a loss, there's nothing to tax. So you're not going to pay that 15.3% or quarterly taxes. but it's something that you want to actually take real numbers and talk to a tax professional about just to be sure. So this is so high level that like I don't know like what the combined income is. This is definitely a tax professional question because it's so nuanced. Sabrina, how exactly do distributions work? How do I pay myself the distributions? So distributions are much simpler than most people think. You simply transfer money from your business account to your personal account. That's how a distribution works. That's it. That's how you pay it. Now, you might be being like, yeah, but what I'm really wondering is how does it work from a tax standpoint? Remember, whether it's a distribution or a draw, you are taxed at the end of the year on your pass-through profits. So that pass-through profit may stay in your business. You're still going to be taxed on it. That pass-through profit may be taken out by you personally. You're still taxed on the whole pass-through profit. I often think about it as like a pizza pie, and what the profit is the pie, right? You have your profit pie, you are taxed on that whole profit pie. If you want to take a slice and eat it, that's fine. You are still taxed on that whole profit pie. Okay, so it's not like when you take a slice of the pie to eat it, you're paying additional tax because you want to eat that slice of pie. It is the whole pie that you're being taxed on. Tamarin, how do I find a good accountant for designers? Ask your friends. The best way to find a good accountant, if you're not going to use collective, is to ask people in your industry and your friends. Look for somebody who knows how self-employed businesses work. Because you are a designer, you want to look for somebody who has expertise in service-based self-employed businesses. People, if they love their accountant, will tell you all about it. Anonymous. If you are a sole proprietor with its own EIN, are you able to transition that into an LLC and an S Corp? You will need to file the LLC. So you can't just from a sole, you still have to go through that formal registration process. So I think you're asking if you can transfer the EIN, and the answer is likely not because you want to create a standalone entity, which is that LLC that is separate from you as a sole proprietor. Matt, I created an LLC, a solo 401k with an LLC through carry.com. Love them. You had mentioned you can only create one with an S Corp. Just wanted to get context on it. It's not that you can only create one as an S Corp. The difference is that with an S Corp, you can create, you can pay yourself as an employee and as an employer. And the employer portion of the contributions are tax deductible for the S Corp. So it sort of, you have this like additional layer of tax benefit. Natalie, can you clarify what distributions are from operating expenses for an S Corp? I'm still confused by what you mean by that. Sure. So operating expenses are your tax deductions. So that's like, I'm a designer, I need to pay for Adobe, right? I'm a designer and I need to pay for my portfolio hosting website. Those are tax deductions. Distributions are personal money that you use from your business, which best practice should be a transfer into your personal account. So a tax deduction is something that is going to be deducted from your total revenue and lower your profit. A distribution is not deducted from your revenue. So if you have $100,000 in revenue and you take a $50,000 distribution to live, your profit is still $100,000. You're just using part of that profit personally. Now, if you have $100,000 in revenue and you have $50,000 in business expenses, which these are expenses that have nothing to do with you personally, then your profit will be $50,000. So that's kind of the main difference. Can I change my LLC to S Corp anytime? You can. Just remember that it doesn't always just go back to the beginning of the year. So if you're trying to change your LLC to an S Corp in October, you're only going to be an LLC and S Corp tax treatment for those 3 months. It's not like I can change it back for 4 years. It doesn't work like that. Do you have any software recommendations for banking and payroll? So banking, I don't because it's so varied. But for payroll, Gusto, we love Gusto. It's a great product and it's a really good product for S Corps. Ray, do you record the distributions on your tax forms and does that have a distribution? Ooh, distributions, always a very hot topic in these webinars. So it depends on how you're filing your taxes. If you're an LLC, then you're recording your profit on your tax form, right? But there's no disadvantages. So I think what's happening here and what happens a lot is that people are confusing distributions with corporate dividends. Corporate dividends, this is if you are a C Corp. If you are a C Corp and you take a corporate dividend, which is that money out of your business for personal use, you do have to record that and pay taxes on that. That is the C Corp structure. But the S Corp, or just if you're filing with the default LLC tax structure, if you take money out personally, you aren't paying taxes on that like chunk of money because you're paying taxes on the total pass-through profit. So there's not really a disadvantage, but this is where the confusion comes in. A lot of people, when they're thinking about distributions, are actually confusing them with corporate dividends. Thank you, TJ. I'm glad it was a great crash course and explainer. Mark, does the cost between a sole proprietor DBA and an LLC have a significant difference, maybe year over year? If you're just going to be like an LLC without the S Corp tax selection, then the real difference you're looking at is whatever your annual fees are for your state. So I don't, where you live will vary. I mean, some states have like biennial fees that are $9. States like California, it's $800 a year. So that's really the difference. Now, if you are doing an LLC with an S Corp tax selection, there is a significant difference because you have to have more tooling. You have that additional tax return. Anonymous, I'm filing together with my husband. Do I only pay the self-employment taxes on my part of income or on both of our incomes? So the self-employment tax is only on your business profits, but your tax bill is the combination of everything, right? So it's his Social Security and Medicare is already coming out of his paycheck, but you don't have a paycheck, right? So yours are coming out of Social Security, or coming out of self-employment tax. So it's only on your business profits, but when you get your total tax bill, it's all going to be like one number. You can ask your tax person to split it out. We've done that. My partner and I have done that in the past, where we've split out just to understand, like, okay, what's really driving our tax bill. Can I switch from an LLC to S Corp once I make more than 60K? You can. I have a current S Corp for a business online merch. The business is not doing so well. Can I change it for a design business, or do I need to create a new S Corp for a freelance design business? I think that, so this is something you do need to talk to a professional about and look up some of the business activity codes, but you may be able to change it. If you designed your merch, I think there's more of like a use case for that. So I would say it's possible, but you still need to consult with somebody to be absolutely sure. Anonymous, I'm not a US citizen. I live in Spain, but starting to get American clients. Is an LLC an option? So an LLC is an option for you, but you cannot file with the S Corp tax election because you're a non-US citizen. So LLCs can be owned by non-citizens, like an American LLC, but you won't be able to ever like file for the S Corp tax election because you must be a citizen or permanent resident. Tamarin, also where you live, does that affect the 60K in annual profit? Like expenses will be more expensive in the Bay Area versus other areas of the US. So it does, but it doesn't actually affect it in California. The place of where it actually affects that 60K threshold is New York. So New York City specifically. New York City has a tax called GCT, General Corporate Tax. Essentially, you have to be earning more in New York City in order for an S Corp to make sense for you. So it sounds like you're in the Bay Area, so that's not really going to impact you. If you are watching this and you are in New York City and you're like, whoa, what? Schedule a call with one of our business advisors. They can go over it with you more specifically of your situation and where it makes sense if you're in New York City. Because unfortunately, New York City has an additional tax that can offset the S Corp tax savings. So you need to bump up your profit threshold. Can an LLC with more than one employee file as an S Corp? Yes. Recommended bookkeeping software, recommended invoicing software to bill clients, Recommended bookkeeping software if you're not going to use Collective, I would say Wave is great. It's a free software. It also comes with invoicing. Xero is another great option. It also has invoicing built in. If you're looking for bookkeeping software, I'd actually recommend that what you do is that you look for something with invoicing built in, so you're not Franken-systeming everything together. Anonymous, can I backdate my earnings once I file as an LLC? Or should I file for an LLC before I take on my first freelance work? So you can't backdate your earnings as once you file for an LLC. So if you are going to work all of June and July as a sole proprietor, and then in August 1st file for an LLC, you can you'll have 2 months as sole proprietor. Well, no, as an LLC, it's all the same because your tax is the same. It's more if you are doing the S Corp tax election that it becomes an issue. So scratch that. As long as you're being taxed as a sole proprietor the whole time, so it just kind of all is the same tax structure. If you were going to do the S Corp tax election mid-year, that's where you have complications. Anonymous, if you are a sole proprietor after a background check, what do you say to HR when they ask you about your sole proprietorship? I don't quite know because I think it's just I am a sole proprietor. I don't have an LLC. I don't quite. I'm sorry, Anonymous. I'm not quite sure. Like, I think this requires more context. What does the S stand for in S Corp? Subchapter is what it stands for. It's a fairly boring name. It's like subchapter, some chapter corporate election or something, but it stands for subchapter. Good one, TJ. I've never been asked that one on a webinar. That was good. I was like, wait, do I remember what the S stands for? Anonymous. So when you take a distribution from your S Corp, how is that taxed? I think we've talked about this quite a bit, but your distribution is not taxed. Remember, it's the pie. You take the slice and you eat the slice of pie, you're still going to be taxed on the whole pie, not just this, not like separately on the tax on the slice that you're eating. So you're taxed on your overall profits, and you're just taking a piece of those profits for yourself. That piece that you take for yourself is not subject to any additional taxes. Maria, if I make $0 in profit, but I invest $20,000 in my LLC, do I still need to pay taxes? No, but you will want to report your loss on your tax return. Wendy, I'm starting a project with a partner who is in a different country, France, and unsure about how to handle splitting income and taxes. I would talk to a professional about this. What likely route you could explore is a multi-member LLC, because that person, even if they're in France, could still own that. But what you want to focus on, Wendy, is the operating agreement. If you're doing a multi-member LLC with this person, the operating agreement is the thing that is going to help ensure that how you split income and taxes is all documented and legally in place. So this is a situation where I would talk with a tax professional or a formation professional. Does it matter what time of year you set up as an S Corp? It somewhat does, only from how much tax savings you receive, right? Because if you are a sole proprietor and you start an S Corp on June 1st, you're only receiving half a year of tax savings. The other thing is how you are taxed. So Sarah, can you share the mid-year tax S Corp tax election article in the chat? Essentially, if you are setting up your S Corp on June 1st, half of the year you're taxed as a sole proprietorship, and you're going to have to file sole proprietorship tax forms like the Schedule C. Half of the year you file your S Corp, and you're going to have to file your income as the S Corp on your business tax return. So it does kind of matter. I don't think it should deter you if you're like, I had $300,000 in profit last year. I'm going to be saving a lot. It's probably worth it, right? So I don't think it should fully deter you that there's sort of more paperwork involved, but you do want to think about it a little bit strategically. This is why if you're in like November and December of the year, it doesn't really make sense to go with the S Corp tax election at that point, because it's like, you're probably not saving enough, but we're still early enough in the year that it could, depending on your unique situation, there still could be enough tax savings to kind of put up with that. Dennis, does Collective support series LLCs? Can we pick S Corp for series? We do not support series LLCs. Dennis, I'd recommend that you look, or is it Denise? Sorry. I recommend that you look at that article on holding companies because we do talk a little bit about series LLCs there. Paul, how soon before starting a new business would you recommend setting up the LLC? I think it's when you think you might start to incur liability. So it's more about thinking about like what type of business you have and when you might have some liability risk. So some businesses are more high risk. Like I always say, like if you have a business that's people are ingesting something that you make or putting something that you make on their bodies, there's obviously like a high risk there, even if you're just giving out samples because you're trying to build your business and you haven't actually like made any money yet. That would be a situation where the LLC earlier would make sense. If you have a relatively like low risk business, then you may be able to wait a little bit longer. So I would like think about that from a where do I really start to incur liability risk? Is it when I sign my first client? Is that when I want the liability protection? Or am I doing research and development and I'm working with people who are using things that I'm trying to develop and there's risk there? Okay, Azubike, can you go from S Corp tax method back to the regular? I've talked about this. You can, it's hard to do. Anonymous, would this platform support a multi-million-dollar company? Anonymous, if you have a multi-million-dollars in profit, an S Corp is not going to be the right tax structure for you. You're going to need to think about a different type of tax structure. At that profit level, you've graduated out of S Corp. So no, we would not. Anonymous, if I have 2 W-2 and freelance jobs, but make less than 60K for freelance, is it worth it to form an LLC, S Corp for limiting overall taxes? Probably not yet. Anonymous, will HR look down on you if you're a sole proprietor instead of being employed by a corporation? That really is going to depend on who you're working with. It would be good for you to understand a bit more about the company. Like I mentioned, some companies prefer to contract with LLCs because basically they know that the company has like some sort of liability protection in place. So it's kind of like, will HR look down on you? That's so subjective of the company itself. I think what I would try to understand in your position is this a company that typically requires an LLC to sign contracts? Sabrina, do I need to send a new contract out to existing clients once I switch from a sole prop to S Corp? So yes, but it's not the S Corp tax selection that's driving that. If you are a sole prop, you have to become an LLC. The LLC is then what your clients are no longer contracting just with you. They're contracting with the LLC itself. So you do want them to sign a new contract with the LLC because that's what it gives you, that liability protection. But that is not what's being, but the S Corp tax selection doesn't drive that. It's really the fact that you're now your own separate entity. And then Anonymous is asking, what would you file when you reach a multi-million-dollar profit? Likely a C Corp would be this is when you start thinking about a C Corp. What is the profit cap for filing an S Corp? It's going to be dependent on your unique situation. But generally speaking, if you're getting up to $1 million in profit, S Corp may be not the most tax advantageous account. Oh my gosh, you all, 57 questions. Thank you, 80 of you for holding out. I'm going to stop screen sharing. Amanda's going to hop back in, and we're going to wrap this up.
Awesome. Thank you so much, Andi. That presentation was jam-packed. So we've definitely covered a lot of ground today. So we hope that this information was valuable for your businesses, whatever point you're at right now, and for your future. So just a reminder, this recording is going to be shared by the Collective team within the next 24 hours. So be sure to catch that in your inbox. From Collective, not from Dribble. So, and of course, we want to extend a heartfelt thank you to our partner Collective for their collaboration and just really bringing this whole webinar to life today. They're the team of gurus. So we are not the professionals. Collective is your man or woman for all the self-employed dribblers here. They're the expert guidance, strategies, operations, trying to maximize your financial savings. So, and of course, we want to thank all of you for attending and participating in today's session. So, your questions made this session way more enriching and engaging. And of course, if you were too shy to share them today, be sure to reach out to the collective team. Check out their respective websites and more resources. And of course, they have that offer for that free session as well with some of their advisors. So thanks again for everyone. And hope you have a great day and catch you next live event here at Dribble.